This is Alan Farley from FX Empire. Dow component McDonald's is starting to look vulnerable and could sell off in coming weeks. Taking a look back, a very strong rally topped out right around the 220 level in August of 2019. That gave way to this two-legged correction with the pandemic decline taking it down to a 3-year low. Now, it also recovered in sort of a 1-2-3 pattern, coming back up to the prior high in September and breaking out in October. As you can see, though, that breakout failed just a few weeks later, yielding this sort of dead price action right along the 200-day moving average all the way into March 2021. Buyers returned during this period. This is when there was a lot of bright thoughts and optimism about the pandemic. Came back up to the prior high, broke out and sort of woggled above the or right through this prior high all the way into July when it took off ahead of earnings, coming up to an all-time high near 250. Now the earnings, even though they were strong, produced a sell the news reaction, dropping the stock back to this 50-day moving average. Now, as you can see, this 50-day moving average has been tested over and over and over again. It is still rising, just like the 200-day moving average, so it is still in an uptrend, but this is getting more and more vulnerable, especially if you look down here at on-bounds volume. Now you go all the way back here to this the January 2020 when accumulation topped out right at the end of January. Right here, it came back up to the prior high and broke out with price during this little assault at new highs in the third or the fourth quarter. As you can see, this is a distribution pattern into March, and since March, even though prices have gone higher, accumulation has hardly budged. Now this is a pretty big bearish divergence. In addition, if I went to the weekly and monthly scale charts, you would see that stochastics have both crossed into sell cycles. Now, this is just sort of speaking to the pretty heavy gravity that's starting to hit the stock, especially there were only 70% of U.S. Restaurants were open in July because of the growing impact of the Delta variant. So I think investors have to watch out because I think we could very easily get a sell-off right back down to this red line and testing the 200-day moving average for the first time since March.